Good afternoon, ladies and gentlemen. Welcome to the last session of this fantastic week in which the Nifty has gained just about 1,000 points in the last 5 trading sessions, and it has made a fabulous record. The index is up 4.3% so far this week, and this 4.3% gain in the last 5 trading sessions is the best weekly gain that we have seen since February 2021. So it's a 4-year record that has been shattered, whether it is bargain hunting, whether it is value buying, whether it is NAV massaging, whatever you might call it. Large caps have come up with a fabulous set of numbers. I'll just tell you the weekly gainers on the Nifty, and then we'll go to our guest. SBI Life is up 11% so far in the last 5 trading sessions, 1544. HDFC Life has added 1% at 678. Shriram Finance is up 8.8% at 675. Apollo Hospitals added 8% at 6600, and Bajaj Auto again up 8% in the past 5 trading sessions. There are many other winners: ONGC, Dr. Reddy's, L&T, Tata Motors and ICICI Bank. Amongst the price losers, there are just 2 on the Nifty in the last 5 trading sessions. ITC down 2.1% in the last 5 sessions, and Tech Mahindra down 2.1%. Without further ado, let's get in touch with Mr. Sudeep Bandyopadhyay, Group Chairman at IndusInd Capital, long-term watcher of the markets, fabulous stock picker, a dear friend, and of course one of the best persons who has all the pulse of the market. Namaste Sudeep ji, and a very warm welcome to you, sir. Is the worst behind us? This 4.2% jump, what does it say?
Well, I would love to believe that the worst is behind us, but I think there are still a lot of uncertainties hovering in the horizon. Particularly the 2nd April is a very critical day. We know what the kind of threats we are getting on a daily basis. The reciprocal tariff kicks in on 2nd April as per the US presidential wish. And we'll have to wait and watch how things pan out. And this is not only India, this is multiple countries. So there will be a lot of confusion and disruption in and around 2nd April. So we need to be a bit careful. So, of course, Indian market, 1 week back was definitely looking in oversold zone, and some amount of correction, some amount of, value buying was bound to come, and that has come, and it's good. Domestic indicators are also looking good with inflation coming down. The path for RBI to cut further interest rate in early April is very clear, and that is good news for Indian economy.
Yes.
So big factors are good. SIP flows, in spite of market correction, has been there. The only challenge is the global uncertainties, which I think still we are not out of the woods.
Okay. Sudeep ji, I may venture to stick my neck out saying that the market is aware of something that us mere mortals aren't. Maybe the mere mortal is reference to myself. And maybe, things may not be as bad as we presume on April 2nd, when, of course, the hanging sword, the threat that President Donald Trump of the United States has placed on India, that tariffs will go up in a reciprocal fashion. Let us see. But let us enjoy this very nice bounce. I'll also request the PCR to show the Nifty Midcap Select Index on a weekly basis, again up 8.5%. The Nifty Small Cap 100 Index up 8.5% in the last 5 trading sessions. Sudeep ji, आंखें सूख गई और दिल बैठ गया लाल 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 देख के. This change in green has been a very, very welcome move as far as markets are concerned. Now, what have you advised advisors, clients at IndusInd Capital? How are you hand-holding their finances? What are you telling them? What should they be doing?
I think I was very convinced for quite some time that Indian market was looking oversold. And I have been advising clients to buy and start buying rather. Not put all the money to work, but start buying. There are multiple pockets in which valuation was looking attractive, including some defense names, which was at one point of time very richly paid, but it was looking attractive in certain pockets. There are pockets in power, there are pockets in BFSI where it was looking attractive and worth buying, and that's what we have been advising. And somebody who is going to build a portfolio for 3-5 years, it was a great opportunity for him or her to pick up good quality shares at a reasonable valuation when the correction happened. And yeah, we have moved up 5-6% from the lows which we had seen, but I think still we are about 10-11% below the peak. We are still, I won't say we are still in that very high valuation zone. So opportunities still do exist. And I strongly even now believe that there are still opportunities in the market from a long-term value buying point of view.
Yes, that's absolutely correct. And you are right in pointing out that large parts of the market was oversold and it was crying to be purchased. One of the best performing sectors in the last 5 sessions has, as you very rightly point out, defense. Look at Mazgaon Dock, look at Garden Reach Shipbuilders, look at Cochin Shipyard. Zentech is still at a 10% circuit today. So all these 4 or 5 stocks that we've just talked about have given stellar returns. Yes, they are way off their all-time highs, but remember, they are now way off their most recent lows also. That is critical. One must be able to gauge the change in direction of the market at the soonest possible hour. Sudeepji, now what now? How do you advise people to navigate at this stage? What would be the best class of stocks that may go up? How should they put in money in lump sum or SIP? What do you advise?
Well, let's take your last question first. If anybody asks me they should put in lump sum or SIP, I will always say SIP, because it ensures that you are buying at not at the peak or not at, probably you will not buy at the bottom as well. I think it gets spread over a period of time. So its advice is always buy through SIP. Systematically you buy. Even if you want to buy, let's say 1,000 shares of Tisco, don't do it at one shot. Buy it in over 2, 3, 5, 7 days. It makes sense, tremendous sense. As far as sectors and pockets are concerned, I think, I'll say some sectors which one needs to be a little careful and avoid at this stage. Let's say avoid, IT for the time being, because there are too much of uncertainty in US. And if US growth falters, Indian IT companies also suffer. So let's avoid IT as a class right now. FMCG, yes, there are green shoots available, but I think still we haven't seen the kind of excitement around FMCG. So maybe FMCG also can be avoided. Now, sectors which definitely needs to be looked at, one is metals. I think there are enough and more factors which are favoring the metals. One, of course, is, globally metal prices have gone up. Some of the metal demand has gone up significantly. We all know what China is trying to do, stimulate the economy for higher growth. And when China stimulates their economy, the metal demand goes up, and it's expected the same thing to happen. A lot of good things are happening as far as metal demand is concerned, both globally and in India. So under these circumstances, I think metal as a sector definitely needs a relook. You need to still pick stocks. It's not that top-down buying, it's bottom-up stock picking, even in the sector. The other sector which I have been, structurally bullish for some time, and I maintain my view, is power. I think there is a structural change happening in the power space in India, and it's going to last for a reasonably long period of time. Now, under the circumstances, every component of this industry will benefit, whether it's the power manufacturers, whether it's power financiers, whether it's component guys, whether it's the exchange. I think pretty much the entire ecosystem will benefit. So one needs to look at power sector as well.
I think that's very sensibly put. This is something that should be listened several times during the course of the next couple of days. Sudeepji, how do you sort of try to console or maybe advise people who are long-term shareholders of IndusInd Bank? This is the only stock in FNO which is down on a weekly basis, and if you look at the March return alone, it is minus 30%. What is your view on IndusInd Bank at current levels?
Well, let me put your first question, answer your first question. If I have to console somebody who is holding IndusInd Bank, I will tell him that, look, the bank is fundamentally strong. There is no problem as far as capital adequacy is concerned. There's no problem as far as asset quality is concerned. So don't worry. And also look at the valuation at which it is quoting. It is zero point 0.7 book, FI27 book. Now, which is significantly cheaper than most other banks, so all these factors does kind of give some kind of solace to the existing investor. Of course, we all know what has happened. There is a lot of uncertainty, I believe, still there in the counter, because internal review has found a certain figure of loss, which is about 1,500 crore at PAT level, but there's external review happening. And maybe there's a forensic audit also happening. Now, with that, I don't know where the loss figure will eventually rest at. But having said that, let's for a minute assume that, let's say 1,500 crore PAT level is the loss. Probably it's one quarter's profit which gets eaten away for IndusInd. So the bank remains strong. The promoter is committed to support if capital is required. So I don't see much of a challenge going forward. Now, the value erosion has happened. How much time it will take for the bank to, go back to the valuation before all this happened, it's all debatable. But at current valuation, if you are a little bit of an aggressive investor, I would say go and buy. Why not go and buy and take that risk? The way it will pan out is, once these, investigations, audits end, I think things will become clearer and the stock will start moving up. You can't have a bank like IndusInd Bank at 0.7 book for a very long time.
Yes. Other interesting part, Sudeepji, in your opening commentary you made was the expectation of a rate cut in April. And against the backdrop of this very heavy demand that we have seen coming in for, private sector banks. Look at HDFC Bank, look at ICICI Bank is actually headed for a record high. We will see probably, hopefully by April. What is your view on the private banking sector, and any hopes that you have from the NBFC space as well? How are you playing these two themes?
I think, I definitely have hope on BFSI. I think this is one sector, Shelji, if you remember, it didn't go up that much also when the market went up. And when market was quoting at crazy valuations, BFSI was still realistic, comparatively. And of course, it corrected, and now it has started again going up. The other fundamental thing is, whenever in an economy interest rate starts coming down, it's good news for BFSI, particularly the efficient BFSI players, because they benefit little disproportionately when interest rate starts coming down. Interest rates reductions get passed on, but there is always a lag, and that's the period when the institutions benefit in a big way. Also, the credit demand goes up in an environment where interest rates are coming down and reasonable. So these all benefits BFSI. Now, as far as specific private sector banks are concerned, I think you named both ICICI and HDFC. Both are doing exceedingly well. ICICI, of course, they have come up with stellar results quarter on quarter for last 8-10 quarters. They've beaten all the expectations consistently over last 8-10 quarters. And I think the way they are going, they will continue to do that. And market is rewarding that. I mean, that's why they're reaching these kind of levels. If you're a long-term investor, buying ICICI or HDFC Bank even now doesn't, it's absolutely fine. There's no problem. But if I'm given a choice to buy today, I will go and probably buy SBI. I think it equally looks good, if not better, if you compare the valuations. I think, all the factors, credit growth is going to be great. Interest rate coming down does help. All their subsidiaries are doing exceedingly well. Asset quality has significantly improved. So SBI at current level definitely makes sense.
Okay. And two stocks. Bajaj Finance, surprise, record high today. And ICICI Bank is also a whisker away. I think today's closing will be a record high for ICICI Bank as well. Suddenly, uh, Sudeep ji, this budget bonanza of 1 lakh crore rupees annually via the tax benefits that the government has given to the middle class has changed the fortunes of NBFCs, in particular Bajaj Finance. Would you hold a view on this one and maybe some other NBFC stocks?
Bajaj Finance is a fantastic company. I think there was a bit of an uncertainty regarding the management change, possible management change. But now that yesterday's board meeting has clarified the management, that management basically continues to remain the same. The transition plan, the roadmap, everything has been clarified. I think market is heaving a sigh of relief, and I think the rally today we see is on the back of yesterday's announcements of continuity and not a drastic change or anything like that. Financially, they're doing very well. As I mentioned, interest rate coming down in the economy does help a company like Bajaj Finance as well. The opportunities are significant, and I think you mentioned some of the other factors as well, which does help Bajaj Finance. And I think it's got a good runway even from here on. If I have to look at other NBFCs, I would say look at the gold loan financiers. There is a secular structural rally going on there, and it's going to continue there. So, of course, Manappuram is in news today for a different reason, and it's reached 237 plus levels, even higher than the offer price of Bain Capital. But that happens when the transaction gets announced. But look at Muthoot, and pretty much both these companies are expected to continue doing well in the near future as well.
Sudeep ji, a word of caution maybe, what would you avoid? You've mentioned you don't like FMCG at all. What else catches your, how should I say, sheer, discomfort even after steep corrections? What are you not liking?
Well, IT is one sector which actually didn't correct that much initially, but now has corrected. The commentary coming from companies like Accenture is also a little alarming. Of course, we know there is a possibility of US slowdown, and that is definitely not a good news for Indian IT companies, which by and large derive 50% plus kind of income from US. And if US IT budgets get slashed or projects are kept on hold, that is very alarming news for Indian IT. So IT is one sector where one has to be a little careful now. FMCG, I'm not absolutely against. All I'm saying there is that keep this sector under watch. The green shoots of consumption increasing are visible, but we have been crying wolf for quite some time. We have been looking at these green shoots for some time now, and things haven't got translated on ground in incremental numbers and profitability and margins for FMCG companies. So I will rather avoid that sector and keep it under watch for some time and wait for clearer signals to emerge.
Okay. Because you head a brokerage, Sudeep ji, what are traders telling you? What are dealers telling you? Is the mojo back? HUDCO, IREDA, RVNL, IRFC, all of them have started to boom. Defense is buzzing. Is there a smile in the dealing room?
Absolutely, there is smile in the dealing room, and there is a lot of excitement. The only thing which is missing is FIIs coming and buying. That is one thing which is still missing, and people are waiting for that to happen as far as the dealing rooms are concerned. But overall, I think there is a positive mood in the market now. This week has been definitely the mood changer, basically. And everybody is hoping and praying that 2nd April doesn't really act as a spoil sport.
President Trump said that I'm not doing it on 1st of April, I'm doing it on 2nd of April. I don't want people to think that I'm making a fool. So, fair enough. I think I have this feeling, Sudeep ji, that all will be well. He's a businessman, he's a negotiator. He will push you to the wall and then say, "Acha bhaiya, jo main keh raha hu wo kar do." India has been here for millennia. It's these Western countries that have come up in the last 200, 300 years. As the Chinese say, this too shall pass. So shall April 2nd also.
Absolutely, absolutely.
Tell our audience, Sudeep ji, absolutely. Tell our viewers, Sudeep ji, how did you personally navigate this downturn? What were the learnings that you got despite being in the markets for 32 years? What were the new learnings and what worked well, what didn't? I mean, what did you do before September that worked really well and what you hope didn't happen?
I will tell you, Shalji, one thing is I was, and I think some of the interactions with you also had mentioned that market was looking, very, very highly, richly valued. And, I could sense there's a correction in the offing. It cannot continue that valuations will be at completely out of sync with fundamentals, cannot continue for a very long time. So the correction was around the corner. What will bring the correction was uncertain. And that's the only thing, uncertainty. So I did personally liquidate a lot of my equity shareholding in multiple companies and sectors. I think that worked well. But I'll tell you something which, being in market, I think it's very difficult to stay away from the market also. So while you liquidate a lot of holdings, you go and invest in certain companies also, and you can't prevent the temptation of doing that, which is what I think is incorrect. And that led to, obviously, the market crashed, and the shares which we bought in September, obviously they are significantly down and things like that. So this is one thing which I think we have to avoid. We chose to exit at the right time on multiple sectors and companies, but investing in September was a mistake, I think, which in future we will have to try and control those urges. Of course, when market started correcting heavily, and by end February, we were convinced that recovery is around the corner. Now, whether it will come in 5th of March or 15th of March or 20th of March was difficult to predict, but that some recovery will come very soon was very clear. And we've been advising everybody to start picking up stocks, which they always wanted to but couldn't because of valuations.
Yes. बिल्कुल बिल्कुल. Sudeep ji, final thoughts on our foreign friends. We've corrected substantially, 26% on mid cap and small cap indices alone. I'm not talking about stocks. Stocks have gone down by 40%, 50% also. Nifty's corrected 16%. Rupee has improved a bit. US 10-year bond yield is down. Dollar index has also eased. What are they waiting for? What do you think is the missing masala in this dish called India?
So a couple of things I would say. See, now some of these are getting corrected as we speak. Indian currency was depreciating heavily. Now, if you see, that acts as a dampener for FIIs when they bring money to India. If Indian currency is depreciating about 5% plus annually, so they have to produce that much incremental return to compensate for that. That's point number one. Point number two, US risk-free return is still around 4.5, hovering around 4.5. So, the 4.5 is the risk-free return. 5%, 5.5 is Indian rupee depreciation. So 10% becomes the bare minimum which they need. Without that, they should not be coming to India. So on top of that, if they have to make returns in India, so then they have to make 5-6 more percent. So they need to at least be convinced that they will make 15-20% return by investing in some stock in India. Now, I think that conviction was not coming. And that's why they were not investing. Of course, there is another factor of what's happening in China, because valuation in China is still now cheap. And, some of the, let's say, the platform companies, the valuation at which they are quoting in India vis-a-vis the similar, or not similar, actually 5-10 times bigger platform companies in China are quoting at, 1/10 the valuation. So, from a FII point of view, who is sitting in New York or London, it's very difficult to kind of come and invest in that particular segment in India and not in China. So that's also a trade-off which they are, cognizant of.
Yes, I think end of the day it was a currency trade, which they played very well, and now they're on the reverse side of that trade. in the sense that they can now get in at about 86, 85 half, 87, 87 half. And then what if the rupee appreciates and the market goes up by 10%? Again, you will get the best of the worlds here. Sudeep ji, one thought, if you could spare for new investors who came in the last 1 year and have seen a very sharp erosion, how would you guide them? What should they be doing, and how does it look?
Well, Shaji, I will tell them to just review their portfolio. If they are holding on to good quality stocks, which have corrected significantly, I think there is absolutely no problem. They should be patient and wait. You have to learn to give time in the market. It's not about timing the market. Be in the market for a time. That's what we keep telling. So if their stock selection has been right, absolutely no problem. Remain invested. However, if the stock selection has been bad and they have bought shares which probably don't have good prospects in the near future, then I think it's better to take the opportunity of this upward movement and exit those bad quality or companies where the future doesn't look too good. Exit those stocks and move to certain sectors and companies where the prospects look good.
Yes, I think that's a very, very sensible advice. Now, the mood question, Sudeep ji, 5 days of stellar returns, 1,000 points in the bag, which is roughly 200 a day. What happens on Monday?
I think the momentum may continue even next week, unless, of course, the global news flow doesn't derail us. I think the mood is going to continue. It may not go up by 200 points every day because it's unrealistic to expect this kind of a rally. But I think the mood is positive, and I'm reasonably convinced that this will continue for some more time. As I said, I think the biggest the issue is what happens to the tariff. If there are further announcements on tariff, which keeps happening, in fact, on a continuous basis, we have to watch that. Somebody very, very recently mentioned that, in a day when President Trump is not talking about tariffs is a good day. The day he starts talking about tariff, there is going to be a bad day. So, we have to hope and pray that he doesn't talk about tariff for the next few days. As long as his attention
With that very fond hope, ladies.
I was saying, Shaji, as long as his attention is on Ukraine and Russia and Gaza and not tariff, I think markets will have good time.
Bilkul. With that very fond hope and an excellent 30-35 minutes with Sudeep ji, we'll thank him. Thank you, Sudeep ji, and enjoy your weekend. It's been a fabulous 5 days after a terrible 5 months. Let's hope the worst is behind us and we now gain more ground and more traction in the coming days. Have a nice evening, sir, and a nice weekend. Okay, ladies and gentlemen, we'll draw to a close now. It's a fabulous 5 days on the Nifty after terrible 5 months. The market has gained 1,000 points on the Nifty alone, which is 4.3% on a weekly basis. This 4.3% weekly gain is the best rise that you have seen since February 7th, 2021. So the Nifty has made a 4-year record as far as weekly gains are concerned, and it's ended really, really well, almost near the day's high. That points to more demand that you might see on Monday. People have bought because of bargain hunting, value buying. We had 2 weekly expiries, Sensex on Tuesday, which ended very, very strongly, Nifty on Thursday, which again ended very strongly. So weak bears have covered their shorts, large caps have gone up. Traditionally, trading companies and momentum stocks such as the defense space, PSU space has perked up really well. Overall, there is a shade of green across the board, and let's hope that it continues in the days to come. We've had 5 months of sustained selling till Feb from September, and let's hope that March ends on a very, very strong note as far as the financial year is concerned and as far as the month itself is concerned. Thank you for watching. I hope you enjoyed conversing with Mr. Sudeep Bandyopadhyay as much as I did. Have a nice evening and a wonderful weekend. Thank you for watching.
Tesla has long been an industry disruptor.